Okay, haven't done an ETF video in a long while, so let's jump in and look at the 20 ETFs that I look at most closely. Starting in alphabetical order with the diamonds. This one has had an exciting change recently. We have been in an uptrend on this, obviously, since 2008, pierced once and once only by a few days in the mayhem of COVID, but since then, absolutely steadfast. And in strictly speaking, maybe we had just 3 days right here during the tariff tantrum, so to speak, the Liberation Day, but well contained on the whole. And the midline has a lot of import too, as you can plainly see. There's a lot of allegiance to the importance of that midline. But more recently, this uptrend was broken a while back, way back in November. Though it doesn't matter because it pushed well higher in price, but it stayed below the broken trend line. And then most recently, this milder trend line was damaged by the littlest bit late last week. And then on Monday, it just smashed right through it. Recovered Tuesday, recovered Wednesday, recovered at the open on Thursday, but sold off and then hopped on Friday down here, creating a new gap. So I am long April puts on the diamonds, $500 strike. And what I'm looking for / hoping for, praying for, is a failure of this 43.18 support zone. That would take us to lows of the year, and also eliminate that price gap. So far so good on that. Emerging markets has been crazy. Take note how similar this Looney Tunes action is to this Looney Tunes action back during the COVID bailout mayhem. You can also see what happened afterward, which of course I would love to see again. But emerging markets just bonkers. I don't tend to mess with the EM, although I will say that I'm short EWJ and EWY right now. EFA, which is basically equities outside North America, has also been on a complete tear. Lifetime highs pretty much on a daily basis. Believe it or not, Friday on an intraday basis, new lifetime high. Although it ended weak on the day, a little bit, as you can see. But it's very lofty, obviously. The bulls have a lot to prove to keep pushing things to even more absurd levels. Now this next one has almost no trading volume at all, but I've become very fond of FNGD. This is the triple bearish against the FANG stocks. The volume used to be good, but they had to do a reverse split. And for some crazy reason, I don't know why, but the volume has absolutely collapsed. So just before the reverse split, it was like about 4 million shares, typically 4, 5, 6, 7 million shares a day. Then afterward, 200,000, 200, 300,000, whisper thin. And so bid ask might be like 68 by 68 and a half or something, just really stupid wide spreads. So I don't know why it became insanely unpopular all of a sudden, because the volume is like 6% of what used to be. Having said that, the price action is still pretty interesting. We've got a nice base here, a breakout, a retrace, and then more strength. And I'd obviously love to see this thing rally, because that will be commensurate with the market falling to pieces. GDX, the miners, lifetime high. What can you say? Just a lifetime high. It's just absolutely explosive. The junior miners, lifetime high. Just amazing. An amazing precious metals rally. Gold itself, not quite at a lifetime high, but getting there. We're actually, the lifetime high close was 494, and Friday's close was 485. So pretty close. We could see lifetime highs next week, possibly. But yeah, gold continuing to rock and roll as people recognize that the US dollar is one-ply toilet paper with splinters in it. IEF is rallying. I was wrong to think that interest rates would be rising, for whatever reason, maybe government intervention, maybe who knows what, but bonds are strengthening. And IEF is the kind of the mid range, 7 to 10 year Treasury bond fund, and it's got a nice inverted head and shoulders. It broke out, relaxed a bit, now it's starting to rally again. IWM, the small caps, failed its uptrend back here in November also, and its milder uptrend, it was kind of like damaging, and then since the 12th, it has stayed persistently below it. Even this rally here kissed the broken trend line, but we've been, we're at the same price now that we were in mid-January. So, 5 weeks of nothing. But, the thrill is gone, definitely. The cubes sank a little on Friday. We are very range bound on this. We're just about smack dab in the middle of a range that we've been in since friggin' September. Just grind. If and when we can break below, say 593, things could get a little saucier because there's plenty of room to fall. Silver, not quite as strong as gold. Percentage-wise did great, but silver's still a goodly amount below its lifetime highs. Semiconductors, SMH, clearly affected by NVIDIA. On the one hand, this has not broken the trend line. It's still in an uptrend. The bulls are still in control, but, to the bear's advantage, we have a failed bullish breakout here, par excellence, and it would take a very modest down day, like, a day like Friday, which is pretty much boring, to cut through this trend line. As you can see in the past, we've teased it and tempted it, but it hasn't happened yet. So it would not take much. Psychologically, 400, I think, would be an important level to break. So, yet with NVIDIA kind of pooping its pampers relative to its amazing fundamentals, got a shot. But they're going to fight it, but it could happen. Soxel, the leveraged bullish semiconductor fund, same idea. It's got a longer ways to go. As a leveraged fund, I'm very surprised how robust this thing is. It's weird. Usually leveraged funds degrade automatically, but this thing acts like it's a 1x type fund. But all the same, it's derivative, both literally and figuratively, but worth watching, I suppose. The spider has, and this symmetric triangle is probably not, it's kind of meaningless at this point. This sucker's been range bound also for way too long. We have been stuck in this quagmire for the entire year, more than this year. It's just like grind. So, the price we're at now is the same price we were before Halloween. Insane. This is the key trend line. That is the midline of a channel going back to 2009. So if we broke this blue zone here, that would have cracked it. It'd be a big deal. TLT, same as IEF, strengthening. Doing pretty nicely there. Let's just lay down a line there. Yep, crossed above it today. XHB, the home builders. I might just move it off my main list. This is so dull. I never do anything with XHB. XLB, very strong after its inverted head and shoulders. XLE, energy, lifetime high. I guess people are, remember Iran, we obliterated them, but for some reason we have to go obliterate them again. So that's what everybody's worried about, Iran conflict. XLP, lifetime high on that bad boy. And finally, XME, surprisingly weak. And we've talked before about how XME is much more vulnerable, irrespective of what precious does, even though precious is a component. So yeah, even with gold just lighting the world on fire, XME is quite flaccid. So anyway, in sum, I am short the cubes, and I'm short the diamonds by way of being long puts on that, and those are my only ETF positions.